Hello everyone, welcome to our channel JAIIB Simplified. In our AFM paper, today we are dealing with Unit 4, Bank Reconciliation Statement. This is very important topic in exam point of view as well as your daily banking routine. Okay, let's go further. We will deal with cash book and passbook. Cash book is maintained by the firm, like proprietor or partnership firm, whatever it may be, and passbook also maintained by the customer, but passbook reflect entries from our bank side, but this cash book entries maintained by the staff of the particular firm. This cash book and passbook both should be identical, and cash book is the mirror image of the passbook and passbook is the mirror image of the cash book as per theory, but in reality they rarely match on any given date. Okay, mirror image rule of bank reconciliation statement. A debit in cash book is credit in passbook. Now let's assume you are a customer and you deposit some amount in your bank account. Then in passbook entry it is showing credited, and the rule is reversed in firm account. Okay, in firm cash book that is minus. Likewise, if you withdraw some amount from your bank in your passbook, the entry should be debit. You have to denote it with minus, and same will be reverse. Okay, the main thumb rule for bank reconciliation statement is a debit in cash book is a credit in passbook. This is the main theme of the bank reconciliation statement, to match with cash book to passbook of the. There are many reasons for mismatch between cash book and bank passbook, and one of the main reason is timing difference. The biggest cause for difference is timing. If you write a check today, you reduce your cash book balance instantly, but the bank only reduces it when payee account actually credited. This time lag is major reason for the mismatch. Suppose if you give a check to some other person, what you will do as a proprietor of the firm, you instantly recorded it in your cash book, and it was not entered immediately in passbook. When it will get credited in your passbook after realization of the check by satisfying all the conditions like availability of funds, signature verification and all. Likewise, if your checks deposited and not collected by a firm, that is recorded in cash book immediately, but banks wait for clearing. After clearing process completion only, your passbook entry will be reflected with the mentioned amount. The second cause for mismatch between bank passbook and customer cash book is bank initiated entries. Sometimes The bank acts without telling you immediately. They might charge fees or collect dividends on your behalf. This shows up in the passbook first. You only find out and record them in your cash book after you made a entry. Okay. Suppose from debit side, what are the possibilities? Bank will debit charges and it will charge interest on month end and some insurance premiums and some standing instructions. Apart from this, any natch mandates, all these will debited. And credit side, interest on your savings account will get credited. If any dividends you will get, those are deposited. And any direct cash deposit or check deposit, all these are credits of a firm. Okay. First, in your cash book, you have to tally with passbook bank charges. Suppose some 15 rupees was debited, some 15 rupees debited for cash handling charges. Then after entry, you have to write it from your bank cash book, okay, to match with bank book and passbook. Okay. The third cause and main cause for mismatch for with cash book and bank book is clerical errors. An accountant might miscalculate a total or bring forward a balance incorrectly. These clerical mistakes must be identified and fixed instantly during the reconciliation process. There might be chance of undercasting or overcasting of columns, and like one entry is recorded twice and carry forward the wrong entries, like that. And bank side errors rarely happen due to computerized errors. There might be some errors exist from bank side. Those are also called clerical errors. The main advantage of balancing cash book to passbook instantly to avoid any frauds done by clerks or understaff and your subordinates. This saves you from bankrupt in many times. This one is very important for exam point of view and examiner favorite topic, dealing with overdrafts. What if you own the bank money? That is an overdraft. In a bank reconciliation statement, overdraft is treated as a negative figure always. If your passbook shows a debit balance, you are overdrawn and your reconciliation must be deal with cash book accordingly. Okay. Suppose if you have OD account of 6 lakhs, in passbook entry it is shown as 6 lakhs debit. Okay. If you full drawn the 6 lakh, it will be shown as 6 lakhs debit, and the corresponding entry in cash book and passbook. In passbook, it is shown as 6 lakh debit. In your cash book, it will be shown as 6 lakhs credit. Likewise, if you fully deposited your OD, then your passbook will be shown as credit and your cash book will be shown debit. And you clearly observe passbook and cash book entries are reverse in nature. That's why we call them as mirror images. Now let's see how to prepare a bank reconciliation statement. To prepare a bank reconciliation statement, you start by comparing your records side by side. Let's take your cash book from one side and passbook the other side. You examine the entries, whatever appearing in cash book and passbook. Both should be matched. If any entry you observe extra, there might be a charges or there might be credit interest for your savings account. You have to reconciliation those with your cash book. So first step is to compare cash book and passbook. Identify any common entries. Adjust the cash book for errors and bank only entries. Reconcile to find the adjusted bank balance. The final output you get after comparing and reconciling the cash book to passbook is the final balance of your bank. What are the advantages of bank reconciliation statement? A regular bank reconciliation statement helps to catch staff frauds and it ensures the management to have the correct cash position and keep your financial reporting in a clear way. If you compare the cash book with the passbook, it detects if any errors in your cash book and it will prevent any staff frauds, any clerical errors. It will always show the true bank balance and it will forecast the future of the company. And it is very important to control the company. If you can't reconciliation the cash book and passbook in a regular basis, it costs you severe losses. Now I will briefly revise what we have discussed so far. First, we have to compare passbook with cash book. Next, adjust the entries and find out the irregularities and reconcile the entries. Doing this at the end of every month to ensure the control of your business. Thanks for watching the video. Do subscribe for more videos. Thank you.